Good morning, everybody. Welcome to the Premarket Prep session for May 9th, 2023. This being our daily session where we go over any and all information necessary to keeping you consistently profitable here across these crazy markets. I'm your host, Adam Holland, stock options expert market strategist, and we're here trying to get the camera, there we go, to cooperate. It doesn't really like when I'm looking at myself on the screen. I feel like it stays pretty focused when I am going through the news. But another week, right, that we have on the docket, another slate full of opportunities to make money, to learn, to grow, to close the gap between where we are, where we want to be. Good morning, Viv. Great to have you here, as always. And let's see what we got going on. Let me set myself up in terms of the news for today. It doesn't look like we have too much extensive news that's going on, but I think it's very important to kind of note where we are in markets overall. And this is something that I've discussed, kind of in the Q&As, right, as of recent, but really just noting the fact that we're in a spot where we do have that ability to begin this next leg down, right? When we talk about everybody predicting recession in the second half of 2023, the case is still there technicals wise, right, on the weekly for that to happen. If we don't get over this kind of 418 area on SPY, right, and we reject it again, we can head right back down. And then if we lose, a certain area on SPY again, we talking like that 380-ish area, we could begin that next leg down overall in markets. So everyone is kind of sitting here watching. I feel like we've heard all these different stories of, Warren Buffett selling stocks, right? We talked about that yesterday, and a number of institutions selling stocks, and, people just kind of preparing, for something to occur. And that possibility is a very real possibility. So again, if you don't know, how to make money to the downside, you need to make sure that you're booking that call right at the link in bio. If you aren't completely airtight when it comes to you executing, trades in general, right, you need to make sure that you book that one-on-one, right? Reach out to me in terms of booking a one-on-one, or book your one-on-one at adamhollandeducates.com. But you need to do what is necessary, because we're at that spot where, again, it can be quite a lucrative spot where we're kind of topping out, rolling over. We have been for a month now, over a month, right, where once we start to actually drop, right, you could start to see some selling ensue, and then from there that could be just the beginning. So again, a ton of money made last year during the sell-offs. There's a ton of money yet to be made this year if we indulge in that same exact price action, and that's something that we could get resuming here across markets, right? That case is definitely possible. So you want to make sure that you're prepared for that. I actually had I had a few one-on-ones yesterday, but I had one in which someone asked because it's kind of been a bit, I don't really do the challenges like on a timed pace. But for the people that missed the last one, they're like, when's the next one? And I'm like, I don't know. I'm not really pressed to do the next one. But I got an idea that I kind of liked, which is like, what about a challenge? This is just like completely charting, right? And just focused on charting. And it's just like sessions, right? It might be a day where it's a few hours, or 2 days where it's a few hours, but literally all we're doing is charting, because I feel like that's really where kind of some people can struggle, is like actually recognizing the endpoints, right, of a pattern, recognizing patterns. So, I don't know what we call it, but that was something that was kind of, floated to me yesterday. And I get a lot of stuff that's floated to me, right, guys? Everybody wants something different. But if we can come to a consensus where I'm like, okay, I like this idea, right? This is something I could see benefiting a lot of people, right? I'll invest some time in it. That does seem like something where I was like, okay, I feel like everybody, regardless of what experience level you're at, can benefit from that. So, that's something I'm toying around. Throw a 3 in the chat if you would enjoy like just a straight up like kind of charting boot camp. If that's something that's of interest to you, and then I can kind of think about, kicking around that idea and what it would look like. But I think that that's really what people kind of struggle with, and you can't really do it. There's no hack to charting better, right? You literally just have to get in the reps, right? So this is something, Viv, everyone can benefit from that. Yeah, because a lot of people struggle in that, I can identify what chart patterns look like. But I think overall, like the majority of people, especially when they're just getting started, they see a lot of patterns that aren't patterns, right? They're just an assortment of candles, and they're not actually, right, a pattern that represents either accumulation or distribution of stocks. So I feel like this might be something where, again, live action, where, I'm going to come up with some method probably to quiz you guys live as well as teach. So I'll be teaching live, but also quizzing live, and just like going through, right, and just, okay, what is this, right? This is how I identify, because a lot of people struggle with picking the endpoints, for certain patterns and identifying things. So that was something that was floated to me yesterday during a one-on-one, and that's something that I might like kick around. So, now that I've kicked around, I don't really like to make anything public unless I've been seriously thinking about it. So I was seriously thinking about it and wanted to get some feedback from you guys. And it seems like you're receptive to that, and that's something you'd be interested in. So, that'll be something that, maybe I look toward. I don't like to put a long time frame on things. So I'm going to see what my June is looking like. And maybe we'll get that down in a June. I am actually moving to be closer to where my girlfriend works. So, I might end up having a busy June, but I could find one weekend in order to squeeze that in and make it work. Maybe like first week or something like that. But you guys know me, like I want to do something and then I want to execute. And I hope you guys are all the same exact way. I don't like to fool around, put a long time frame on things. I put up a link, you register here, and then we get it popping, right? But and place their endpoints on the right points of a chart. So I think if we just took a day or 2 days and literally just charted our butts off, so that you're live understanding what I'm looking for. I go in a little bit more detail in terms of like identifying like how you identify what areas to chart, right? Because you have a whole big chart. There's specific areas to chart. I think that would help a lot of people. So I'll look into that, right? And you guys can help keep me accountable with that. But I threw out, just checking my calendar, I got a busy May, busy June, but I think beginning of June, I could probably do something. So in a few weeks, so excited for that. I'll flush out what that looks like. But overall, let's dive into our news for today. And if you guys missed the beginning of this session, please go back and watch the recording, right? I made some very important statements about the market and where we're at that everybody needs to be aware of. That really gives context to the past month really of movement that we've been seeing, month and a half. So top news, the Bull Bellows, but I'm going to throw a question mark on that, right? So the NASDAQ composite has officially exited a bear market as investors continue to pile into tech stocks that have been shunned for much of the past year. We already exited the bear market and then we dropped back into it, right? And then we're just recently exiting again. So for everybody who thinks that this is like a super impactful headline, it's not. We've been teeter-tottering on, the NASDAQ and tech overall being still within the bear market and making its way out. So we've already had this headline before this year. It was just that we dropped significantly and then we popped again, right? So the whole important thing is that if we hit an area, we drop, we pop again, we don't break over that area. What is that? A double top, right? So this is really what we're looking at, and it explains kind of the chop and the rolling over that we've been seeing this past month and a half. So nothing is, definitive until it is definitive. It's just something you got to keep in the back of your mind. Now, a slight gain of 0.2% on Monday saw the popular index in the session at 12,256.92, up 20% from its closing low of 10,213.29 on December 28th. It took just 89 trading days for the index to record the new milestone and follows a similar path of the related NASDAQ 100 index, which surged into a new bull market back in March, right? So there's the NASDAQ composite and the NASDAQ 100. Bigger picture, investors are taking note as the NASDAQ composite is the first major benchmark to regain its bull stature. Elsewhere, the S&P 500 is up 16% since its last lows since October 2022, while the Dow Jones Industrial Average, ticker DJI, is up 17% since this past September. Only another 3 to 4% move will see the two indices restore their bull market status, but some are debating the technicals and what the future may hold, right? Just like I started off the session talking about. Now, quote, after this powerful earnings season and a more favorable environment from the Fed, the NASDAQ looks poised for a breakout, right? Seeking Alpha Investing Group leader Bill Gunderson after calling a bottom back in January. Others, like contributor Fountainhead, are more cautious, citing a need to conserve cash as creeping complacency calls for a correction. Recall that the NASDAQ last exited a bear market in August 2022, and only 2 months later it entered a bear market again, slumping 20% from its high by October. It's taken 7 months since then for the NASDAQ to become a bull, which could make the rally more durable or possibly lend credence to those calling the recent bullish trends and not the NASDAQ 100. The difference between the two is that the NASDAQ composite measures the change in more than 2,500 stocks listed on the NASDAQ exchange, right? While the NASDAQ 100 is a market cap weighted index made up of the largest or 100 largest non-financial companies traded on the exchange. However, both track domestic and international firms compared to popular indices like the Dow Jones Industrial Average, which only measures the largest American companies. So overall, the NASDAQ 100, right, that's NDX, that's, QQQ also, right? So that's going to be your tech heavyweight, where it's really the 100 largest non-financial companies that are traded on the NASDAQ composite, right? So it's all a lot of terminology. You don't really need to be aware of what all of it means, right? As long as you know NASDAQ, QQQ, this is what I'm trading, right? Then you're good. And the difference between an index and et cetera, which you learn within the course. But overall, just kind of looking like more of a slower day if they take the time to explain the difference between the NASDAQ composite and the NASDAQ 100. But if you didn't know that, now you know. It's also one of those things where it doesn't really matter too much if you know it or you don't know it. But with that creep up that we had yesterday, right, we've got the NASDAQ composite officially making its way out of a bear market and into a bull market. Does it stay that way? Yet to be seen, right? Yet to be seen. We got to make sure that we end up kind of holding those levels that we achieve. Yesterday we had one of the lowest volume days, and unfortunately, I had to go. I had to go meet my mom at Johns Hopkins, kind of a little bit closer here, but I had to hop on the road for really the last hour of the day, and it was. But I get back and I check my computer, and we had one of the lowest volume days that we've had in a long time, right? Very low volume day yesterday. So we did have the QQQ close over previous daily resistance, but it was on a very low volume day. And those aren't the days where you typically want to invest much in that breakout, because that is the prime recipe for a fake out. And as you can see here, the QQQ, we closed up yesterday, up around, what was that, like 323.58. We're opening this morning around 321.92. So QQQ overnight selling off, right? Not huge, but significantly. Like if you swung calls that expired today from yesterday, those are dust, right? And if you swung calls that expired this week, those are also struggling. So there's no kind of guarantee that we stay down here. It can still make its way back up, but that's why it's important to also check volume and recognize the larger kind of circumstances whenever you are evaluating a breakout, right? Because technicals are very important, right? But it's also important to make sure that you're taking into context other pieces of information. I got my mic struggling down here. It's also important to make sure that you're taking into context other important pieces of information, right? So you want to make sure, there we go, guess a little bit better. You want to make sure that you're looking at volume, right? That you're looking at, kind of the overall price action during the day. If we get a breakout and that breakout happens on low volume, I'm not really trusting that as much as if we get a breakout on large volume, right? Because that means that there's real conviction behind the move. And you want real conviction behind the move, 1000%. So when I got back, I was kind of looking at that sideways. And as of right now, at least for pre-market, there was reason to do that because, we're not pushing, as of right now. So we'll see if we end up beginning to push. But over the course of the past few weeks, it's really been the market like fighting back sellers at the top of these, uptrends, right? We're uptrending, but we just got these long tails where we're just kind of fighting off sellers, trying to fight off sellers, trying to fight off sellers. How much longer does that last? How much longer does that last? We've got to see. But overall, at least on SPY, right? SPY definitely has the potential to set up for something bearish that takes us into a recession for the second half of the year. But yeah, when we talk about kind of the movement that we got yesterday, it's kind of like, the Bull Bellows question mark, right? Do we really trust this? I don't know. We'll continue to move, based off of what the charts tell us to do, but you just have that in the back of your mind, right? You read every day. Warren Buffett sold a bunch of stocks in Q1 of 2023, right? You don't ever follow people, but you do use their movements to give context to your movements. So when you see that, you're like, does he know something I don't know, right? Does he have some idea of, and there could be completely different circumstances for why, but generally, people don't sell a ton of stock if they expect the market to continue to go up, right? So that tells me that he knows something, possibly that I need to be taking into account. And it makes me go to a higher time frame and examine, okay, if things were to go bearish, how would that happen? And that's what you need to do when you hear news. You don't want to take action off of it, but you want to take a step back, go out to a high time frame, and then blank chart, say, okay, how could this happen? If we do go into a recession second half of 2023, like everyone is talking about, how would that occur? And then you start to look at it, you say, okay, I could see this chart pattern playing out, right? And then that's how you can start to set up and say, all right, like this is something I got to start factoring into my possibilities, right? Into my trading plan. In terms of economic news here, debt ceiling, President Biden today is scheduled to meet with House Speaker Kevin McCarthy and other top congressional leaders for high-stakes talks on the nation's debt limit. While an immediate breakthrough is unlikely, it will set the tone for fiscal negotiations that'll be the talk of financial markets in the coming weeks. Ahead of the action, Treasury Secretary Janet Yellen is reportedly lobbying for help, reaching out to the U.S. business and financial leaders to explain the catastrophic impact a default would have on the economy. Sources told Reuters that she's having one-on-one conversations with individual CEOs to warn them about the, quote, dangerous consequences of current brinksmanship, just a day after describing what would happen if an agreement failed to materialize on Capitol Hill. I actually had a few one-on-ones yesterday, but one of them was with actually a friend of mine who I went to high school with, and he works on the Hill and is very tied in with these things. And that was something that, we talked about. He was asking like, okay, what are the ramifications of what we have going on here, with the debt ceiling and Janet Yellen warning of things. My first comment on Yellen is always that Yellen tends to be wrong a lot. You guys have heard that from me on here, especially when it comes to inflation. This doesn't have to do with inflation. But Yellen, right, has never once correctly predicted inflation, and it just, automatically dents my view of her credence, right, of her of taking what she says with a grain of salt, right? Whatever she says something, I'm like, okay, will it actually though? Because you've been plenty wrong before. The debt ceiling, like I talked about yesterday, is one of those things where it tends to always get worked out. I don't really see it having an effect on markets. It could be one of those things that it's right. If it doesn't get worked out, it could be one of those factors amongst a number of others that contributes to us going down. If we do tank, I'm sure if the debt ceiling, if this isn't restructured, I'm sure this will be something that they will copy and paste onto a headline, right? Congress doesn't, pass debt ceiling deal, market tanks. Is that going to be the direct reason? No, right? But it could be one of the contributing reasons. But overall, you don't know until you start seeing that manifest in terms of price action, right? We just talked about how the NASDAQ exited a bear market, right? And entered a bull market, although marginally it still did, right? If you were sitting here bearish because of this debt ceiling issue, then you missed out on a ton of money over the course of the past few weeks, right? Because you were sitting here bearish when we've taken advantage of a lot of bullish movement. So it's always about waiting on news and seeing, okay, does this affect the charts? And then making moves based off of whether or not it affects the charts, right? So in terms of commodities news, critical materials, no automaker in North America currently refines its own lithium. That is so important. No automaker in North America currently refines its own lithium. But Tesla is looking to change that by breaking ground on a $375 million refining facility in Corpus Christi, Texas. The move will help the EV pioneer ease its supply chain and meet ambitious EV sales targets as it expands outside its core focus for car manufacturing and into raw materials. Elon Musk, who previously likened lithium refining to printing money, expects the new Tesla plant to produce enough battery-grade lithium to build 1 million electric vehicles by 2025. This goes along with that strategy that I've been talking about for Tesla for the past year, right? Which is investing into the infrastructure of electric vehicles. Yes, they were the Netflix to streaming, right? Netflix was to streaming as Tesla was to EVs, right? They led the way. But once people start catching up, the only way that you can make sure you maintain that lead is by creating the infrastructure that everyone else needs. It's like if you start a burger joint, you're the first burger joint in town, a bunch of other burger joints come up, but then you start a farm, right? You need cows in order to get burgers, good burgers, not impossible burgers, right? So you're like, okay, I'm going to make sure that I'm ingrained in the infrastructure, right? The packaging facility of the burgers, the storage of the burgers. A lot of money goes into that. Tesla's making sure that they will always be here, regardless of whether or not you drive a Tesla EV. You will use a Tesla charging station. You will use Tesla batteries. You will use Tesla critical materials, right? You will use Tesla's mines. That's what they are making sure that they're doing. They're from charging to the batteries to the materials that go into the batteries. You're getting them from Tesla. So even if you're not driving a Tesla, Tesla's making money off of the EV that you're driving, right? I think it's an ingenious plan. I think it's super smart. I agree with Elon Musk. If you guys remember the first challenge that I ever did last year, that challenge, we talked a lot about lithium. Lithium is the most important, critical material when we talk about, basic materials of the future, because it's critical to batteries in electric vehicles, and batteries in general are the future. So lithium is worth its weight in gold. We currently have no North America refinery that refines its own lithium, and Tesla is building one. It will be the first, right? Something that's very important. So when you talk about when you're investing in Tesla, it's more than just the vehicles. And again, I'm not a Tesla stan, right? There are people that ride a lot harder for Tesla than me. I try and be very impartial. I'm just saying I love this move, and I think it's incredibly intelligent. Now let's see here. Quote, Texas wants to be able to be self-reliant, not dependent upon any foreign hostile nation for what we need. Texas Governor Greg Abbott added at the ceremony. We need lithium. So lithium going to continue being very important, but this, kind of is definitely another aspect that makes me bullish on Tesla in terms of them moving forward, right? They can do a lot of crazy stuff. They have a crazy owner. But at the end of the day, when you ingrain yourself in the infrastructure of the future, right, you're always going to be valuable. Now let's move on to Outlook, the pause that refreshes. And let me come back, check on any questions, anything like that. All right, cool. Everybody's good. I see everybody throwing around the GMs. I also realized I started without saying, make sure you throw that 1 in the chat. So if you're watching this, right, whether live or via replay, make sure you're throwing that 1 in the chat, signifying your intention to get 1% better. That's what we're looking to do, guys, here each and every day. Hopefully the sound is good. Let me know if you guys can give me like a yes or a 1 or a 2, maybe a 2 in the chat if the sound is good. I know that the mic is kind of like down here, but I tend to project even without a mic. Okay, awesome. I just wanted to make sure I wasn't like fading in and out or anything. But I tend to not really need a microphone. So I think that I'll be good. I just like enhancing the sound quality for these videos by using this rather than using the webcam mic, which sounds horrible when I went back to play it. So thanks, Viv, for that. Appreciate it. Now let me see here. So Outlook, the pause that refreshes. Fed funds futures are pricing in a Fed pause, and stocks may have to make hay while the sun shines as rates stay steady. On the cut, once the cuts start, equities tend to struggle, according to BTIG, with history showing the S&P slumps when the FOMC starts loosening, right? So that is something that's super important. We haven't talked about that. We started talking about it yesterday. People always say, okay, well, you know what? We price in a Fed pause. People think, oh, when the Fed finally pauses or it starts, kind of loosening and cutting interest rates, people think, oh, the market's going to run. It doesn't, right? Historically, it does not do that. Equities actually tend to struggle. So that's why, again, when we talk about, oh, well, how are we going to go into a recession if the Fed starts to cut rates? And, if the Fed does that, then markets are going to rocket. Markets don't rocket typically when the Fed starts to cut. So I think that's important. That's another factor that actually contributes to the idea that we can go lower and have a recession in the second half of 2023. On a more bullish note, Stifel boosted its price target on the S&P for year end, with its strategists expecting inflation to drop sharply. Meanwhile, AI is still the big buzz in earnings calls. B of A looks at what this means for CapEx spending in tech, noting that the healthcare XLV tops all S&P sectors for both top and bottom line beats this season. I don't doubt it, right? Companies like Eli Lilly absolutely smashing it in 2023. In terms of today's markets, we got a mixed bag across the board, more red than green, I must admit. In Asia, Japan, we're up 1%. Hong Kong, we're down 2.1%. China, we're down 1.1%. India, flat. The footy in London, down 0.4. Paris, down 0.8. Frankfurt, down 0.2. The Dow is down 0.3%. S&P down 0.4. NASDAQ down 0.4. So significantly red here coming into the morning. Crude oil down 1%. Gold up 0.2. Bitcoin down another 1.1% to 27,646. In terms of today's economic calendar, we have a member of the Fed speaking at noon, right? That's really the only thing that could possibly move markets when we talk about, any type of data. So not a whole lot, which is nice because it won't interrupt the price action. If it's any price action like we had yesterday, it was wild price action, right? And Mondays recently have been wild. That's something I talked about yesterday. We tend to get like a lot of chop, a lot of crazy action, right? You don't want to be too heavy on Mondays, and that was definitely the case yesterday. We got a lot of, kind of wild action to start the day. We swung, puts into the day because we had rejected daily resistance from last week. Those puts were profitable, right? Made us money. And then from there, it's like, okay, it showed like after that, start to get a handle on things, get into calls. Those calls paid very nicely up into the level, right? Predicted that level was going to go to, went to that level. Take profit on calls, nice profit on that. And then, we lost that intraday uptrend. We also hit resistance. So, some nice scalps on puts. Those paid very handsomely, very quickly, right? And then we saw a bounce where we ended up pushing right back up kind of in the close. And I'm on the road for that. And I check back and I'm like, oh, wow, look at that bounce at the end of day. But that's why, again, you want to reiterate that during choppy markets, especially when you look at the past few weeks, we've been in a $6 range, right? Literally a $6 range. You want to be taking profits, right? Quickly. Make sure you're locking down the majority of what you have. Leave one runner, leave two runners, right? But take that 40%, sometimes that 20, right? Take that. If things are looking shaky, take that 25, right? Take that 40, take that 50, take that 70. Because we had puts, yesterday they made a quick 70%. If you took no profit on those, we got that bounce. You didn't make anything, right? So don't think that, okay, because this is looking good, that this trade owes me 100%, or it owes me this good round number that feels good inside of me, right? Because the market does not care what number looks good to you or what number feels good, right? You take what it gives you, you lock it down, and you keep it pushing, especially if you're trading on a Monday, since Mondays have been, so ugly over the course of the past few Mondays. Now, in terms of what else is happening, we got our rapid fire bullet point rundown to take us out. Fed's SLOOS, that's SLOOS, shows banks are continuing to tighten loan standards. JP Morgan, ticker JPM, alleges Staley hampered efforts to cut Epstein ties. So Staley did not want to cut ties with Epstein, it looks like, and he works at JP Morgan. So this Epstein stuff I don't think this affects JP Morgan, like the stock in any way, mainly just people within JP Morgan. PayPal slips as guidance disappoints, right? Something I talked about yesterday. Again, did not place any bets on PayPal, but it was something that when you have Apple entering the space, right, you can struggle. And Palantir soared for earnings. So PLTR was soaring. Those are two things that are on the docket here this morning, right? For kind of post earnings plays, you can take a look at them. I talked about post earnings plays and those setups yesterday. So that's something to kind of look at, keep an eye on. Disney expands suit against DeSantis after voided land deals. Tyson Foods, ticker TSN, stumbles on trimmed outlook, pulls down peers. U.S. to propose new rules for airline cancellations and delays. Occidental Petroleum, ticker Oxy, begins buying back Buffett's preferred stock. Oil Watch, Saudi Aramco, ticker ARMCO, posts 20% drop in Q1 profits. And then LinkedIn, which is owned by Microsoft, cuts employees, shuts down China-focused app. So once again, we have another branch of American tech company that just cannot get it done in China. China is a very, very tough market, and American companies get whooped every time they try and go over there because China rips them off because there's no, kind of proprietary thing stopping them from doing that. China rips them off, but they do it better because they're Chinese, right? They do it better for China. Everything is better in terms of like idiosyncrasies, small things. There are a lot of very different things between American culture and Chinese culture. So you can't go over with an American mindset trying to do things in a Chinese world. It just doesn't work. And then you get a copier who does it, but they do it with a Chinese twist that makes it easier and more intuitive for Chinese people. And it does better, right? And it also just becomes a billion-dollar company, which is so funny. Like there have been so many billionaires birthed from just copying American companies, but doing it the Chinese way, right? In ways that Chinese people appreciate. And, it's pretty good deal, right? If you can get your money on some funding in China and you got an American idea that tries to come over there, you copy it, pretty much always works out. So in terms of Oil Watch, we just did that Saudi Aramco. So our last headline here, Amazon is looking at offering original videos to other outlets. So it looks like Amazon is offering maybe some of their media, like they have shows and a number of different, kind of media offerings from Amazon. Maybe they're looking at offering that to like a Netflix or something. But I think that could be interesting. We'll see what happens. At this point, all the streamers, right, have good stuff going on. Amazon's had some good shows. Hulu has some good shows. So, the streaming war continues, as well as the war for us versus our past selves, right? That's all we're trying to do is gain one up, get 1% better. And I think that you did that. I know that you did that by being here for this session. We went over a lot of important things. Again, the beginning of the session, if you missed it, rewatch this. I went over a lot of important things in terms of the outlook for where we are, where markets are likely to go from here. So make sure that you're kind of locked in for that. If you got anything valuable from this session, just show love to the accounts. I see you guys, commenting, showing love. I appreciate it. It means a whole lot to me. As you guys know, I ride hard for what I believe in, right? I'm here each and every day, pumping out content for free. I'm live every day. Get this content done over on Instagram. It gets posted to YouTube. It gets posted to all these different places, right? So I appreciate you guys kind of reciprocating it, appreciating that. And if you don't show that appreciation, right, you don't appreciate anything until it's gone. Then once it's gone, you're like, dang, I really missed when this guy would hop on and break down markets for free before they opened, right? Or would teach me things with cool animations for the free, every day, right? So make sure you appreciate where it is while you have it. Because I love being here. I love doing what I do, but I also want passionate people along with me, right? We gather arms together And that way you're never alone, right? You're never alone when you're looking to do better for yourself. You always have a community to be involved in. And that's what I want this community to be for each and every person involved. So everybody have a great rest of your day, right? Make sure you share this with somebody, pass it on. Friends don't let friends stay broke. So let's continue to thrive together. And other than that, I'll see you back here tomorrow morning for our next pre-market prep session. Have a good one.